This handbook systematically and comprehensively consolidates a large body of literature on IPOs and provides a foundation for future debates and inquiry. This handbook studies the international landscape of IPOs in the aftermath of the financial crisis. Moreover, it provides studies of special types of IPOs, such as special purpose acquisition companies, SPACs, and reverse mergers. It further shows alternatives to IPOs, including mergers and acquisitions, private marketplaces, and crowdfunding. There is a body of quality work on IPOs, but the literature is fragmented, including work in economics, finance, management, international business, and law. This handbook combines work from different scholars in these areas from around the world. IPOs and related topics of securities regulation, including investment banks, auditors, reverse mergers, venture capital, and crowdfunding, have been of significant interest in the recent literature. Evidence on the importance and growth of these topics is noted in studies. The data indicate that crowdfunding is one of the fastest-growing topics of academic interest. There is strong evidence of continued research on these topics in coming years. 1.1 Chapters in the Oxford Handbook of IPOs. The chapters are organized into 5 main parts. Part 1 deals with the economics of IPOs and offers statistics and regulatory insights from the United States and other countries around the world. Part 2 covers mergers versus IPOs, as well as reverse mergers and special purpose acquisition companies. Part 3 analyzes institutional ties in IPOs, including analysts, investment banks, auditors, and venture capitalists. Part 4 provides international perspectives on IPOs from Canada, Europe, Hong Kong, China, India, and New Zealand. Part 5 discusses alternatives to IPOs, including private marketplaces and crowdfunding. More specifically, Part 1 of this handbook begins in Chapter 2 with Keston's analysis of why companies seek to raise capital in an IPO. Chapter 3 by Bowe and Dunbar examines the regulatory burdens associated with listing in the United States and the economic consequences for the number of listings over time. Chapter 4 by Bolton, Smart, and Zutter, 2017, examines the international IPO market in 38 countries and factors correlated with the extent to which IPOs are underpriced in different countries. Chapter 5 by Bhagat, Liu, and Rangan provides an analysis of the factors that affect IPO valuation in Australia, Canada, China, Germany, India, Japan, the United Kingdom, and United States. In Chapter 6, Jones and Yeoman provide an explanation as to why IPOs are underpriced in both hot and cold markets. Part 1 concludes with Wang and Young's Chapter 7 on IPO long-run returns, volume, and delisting. Part 2 of this handbook begins with an analysis of mergers versus acquisitions in Chapter 8 by Aktas, Andres, and Ozdakak. Thereafter, reverse mergers are studied in the United States by Sekela and Floros in Chapter 9, and in China by Cheng, Fleming, and Liu in Chapter 10. Shakmarov and Vulanovic study special purpose acquisition companies in Chapter 11. These alternative listing forms provide interesting insights into complements and substitutes to the IPO market and are growing in importance over time. Part 3 of this handbook examines the role of different institutional ties in IPOs, including the role of analysts in Chapter 12 by Buzuita and Gress, auditors in Chapter 13 by Koning, Mertens, and Rosenboom, underwriters in Chapter 14 by De Rieper and Schweinbacher, and venture capitalists by Haas and Tarsaluska.